With the most recent job and unemployment rate figures released to the public, the Fed has just reaffirmed what is going to happen for XRP. As we provide the data to you in today's video, XRP holders, I'm going to share with you some very important information that gives us a very strong indicator of where the Fed is going based on statements they have made. I believe what I'm going to share with you guys is supported by the fact that there is a lot more to discuss. We must first address the primary topic of today's program, which is the unemployment rate in the United States. Thus, there is a fairly noticeable trend when we examine the unemployment rate. It is, in fact, increasing. The percentage of people experiencing bad sales is increasing, which is a significant issue. And the labor market is becoming weaker by the day. First and foremost, as you can see, in July, 11% of small firms cited low sales as their top issue, the greatest percentage since the 2020 pandemic. In the past 7 months, this proportion has doubled. Additionally, this has been a leading signal of rising unemployment in past economic cycles. Additionally, it now suggests that in the upcoming months, the employment rate may surpass 5%. The 62.3 million people, or 45.9% of all American workers, are employed by small businesses. Now, you'll likely recall the number of rate cuts that occurred during this time in 2020 and the impact they had on the markets, which is why I'm taking this very seriously. It was completely crazy. Naturally, the rates eventually increased again, the unemployment rate decreased again, and so on. Incredible things for many of you. The crypto industry's greatest bull run occurred in 2021. People made a lot of money during that bull run and altcoins were doing 100x's for those of you who weren't there. It felt like it happened every other day. It was crazy. Naturally, there is another comparable example from the years after the financial crisis in 2010, when the Fed's monetary policy was also very similar. At this time, the Fed's top priority is always to reduce unemployment and ensure that inflation stays within reasonable bounds. They have two primary mandates. Therefore, they must take action if employment statistics indicates that unemployment is increasing. It is imperative that they take action. As you can see, we had record-breaking sales statistics from small, medium, and large businesses in 2022. In the business cycle, many were doing very well. Based on all of the prior Fed choices, I wanted to ask Roque what the Fed would do if unemployment and inflation were to rise simultaneously. Because, as I just shown to you all, PPI inflation data is rising significantly. Therefore, the Fed typically does not want to decrease rates if it observes that inflation is rising. However, they are faced with a very difficult choice when there is stagflation, which is when inflation rises while the labor market weakens and unemployment rises. One of the two will have to be sacrificed. It's a difficult decision for the Fed to make, but fortunately we have a lot of data and prior decisions from Jerome Powell, who has been in office for a long time, as well as other former Federal Reserves to base our decisions on. Do we let unemployment worsen so that inflation may start to decline, or do we let this continue and not lower rates? As you can see right here, the Fed usually lowers interest rates to boost economic activity when the labor market is faltering, as seen by rising unemployment. In order to cool demand and stabilize prices, the Fed usually maintains or even raises interest rates in response to rising inflation, especially when it is caused by factors like tariffs, supply chain problems, or rises in commodity prices. According to recent studies, inflation estimates for 2025 have been raised from 2% to 2.7%. Therefore, rising unemployment and inflation at the same time are characteristics of stagflation, which makes monetary policy extremely difficult. The Fed has historically had difficulty addressing both at the same time, as was the case in the 1970s. The Fed may maintain or even increase rates if inflation is seen as a serious concern. However, rate cuts are increasingly conceivable if unemployment becomes a more urgent issue. According to Fed Chair Jerome Powell, the next course of action will be determined by either indicator, inflation or unemployment, worsens more. According to the economic framework I just gave you, PPI inflation is on the rise, while CPI inflation is remaining under control. Then there is the growing unemployment rate, which is essentially stagflation. How likely is it that the Fed will cut interest rates? In light of rising inflation and unemployment, Grok estimates that there is a 70–90% possibility that the Fed will decrease interest rates. The Fed will lower rates 3 to 5 times before the year closes, according to a number of strong forecasts I've seen from Goldman Sachs, BlackRock, and JP Morgan. In other words, Goldman Sachs is effectively projecting September, October, November, and December. It would be completely crazy if we saw several rate cuts in a single month, perhaps even 2 rate cuts or a couple basis points. However, we'll see how that turns out. Numerous other events are currently taking place that are undoubtedly, in my opinion, also quite significant in the markets, and they will have an impact on the price of XRP. In case you were unaware, the price of XRP will rise on the market in a few months due to lower interest rates and increased liquidity. That's simply how it operates. Alright, so that's just the 90% relationship between the price of digital assets and economic stimulus. You can see that as you are aware, in July, the Richmond Fed Manufacturing Index falls by a negative 20 points, which is the second lowest since the 2020 pandemic and is once again resembling earlier instances. The Fed is undoubtedly considering this data and thinking U.S. manufacturers, small and medium-sized businesses require assistance. The rate of unemployment is rising. They are taking all of these things into account. You may be asking yourself, well, why is the market so volatile? Why are cryptocurrency longs worth 100 million being liquidated in under 60 minutes? There are many variables at play, but you must consider what the large or smart money is doing with institutional capital. Michael Saylor recently spent 50 million on 430 Bitcoin. This comes after the day's big dump. As you can see from this chart, this particular stretch alone liquidated more than 100 million worth of long positions. We're trading sideways once more now. Institutional capital is currently interested in these markets because they see a chance to sell off a large number of long positions. All right, I'm also purchasing these dips. Right there is my small purchase indicator, which I will most likely launch tomorrow. A huge thank you for that. Please take note that nothing I say in these videos is financial advice. The description also includes a complete disclaimer. I appreciate you all watching, and I hope to see you again soon. Goodbye.